Hey everyone, Jeff Dorman, CIO of Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital asset market, as we've been doing every week for the last 7.5 years. Obviously not investment advice, but we will be talking about the markets. For those who prefer to read, you can read the full blog on our website, ar.ca/blog, called That's Our Two Satoshis. All right, so let's dig into what's happening in crypto. Look, week over week, wasn't a great week for crypto if you just kind of go Sunday to Sunday. Certainly underperformed the rest of global markets. But probably the most interesting thing was most of that underperformance came on Saturday and Sunday, right? We had a major geopolitical event unfold on Thursday and Friday, escalated through the weekend. Oil prices spiked, emerging market currencies gapped down, and digital assets took the brunt of it. Probably a muted response relative to what we've maybe seen in the past, but still, you had almost 10% downside in some of the majors. Meanwhile, U.S. debt and equity markets were just closed. They don't get to participate. Markets are closed, Wall Street sleeps while the world burns. This is really interesting, right? I mean, we've been talking about this for almost a decade now about when are the markets going to go to 24/7 trading, what's really holding it up. It's really strange when you have that kind of a market reaction and markets are closed, right? You've seen a little bit of this before crypto. You go back to like 2008, for example. Almost every single U.S.-based fund was trading Asian equities overnight and vice versa. So there's obviously ways around it. If you look at like a Venn diagram of when markets are open, there's always a market open somewhere. But it's crazy when you have news after hours and you're sitting here as an investor wondering, I just have to wait until my market opens again. It could be 2.5 days later, 63 hours later before I have a chance to do something about it. That's just crazy in this day and age of technology. Now let me caveat that by saying, I've traded debt and equities. I've traded CDS. I've traded every region of the world. I've traded every sector. I've traded every asset class. Taking a break is healthy. Even the worst trading days ever come to an end, and you have a chance to catch your breath, figure out your risk, figure out what you want to do. Same with the worst trading weeks; they come to an end. Like there is a healthiness to having to pause and gain clarity, right? The flip side of that is, take the Terra Luna debacle in 2022 in crypto, for example, where it was just nonstop craziness for 3 straight 24-hour sessions without a break. It was impossible to even figure out what was happening or what your risk was in real time in there. So I think there is some merit to having markets close once in a while, but I think having the option to step away is very different than being forced to step away. When there's critical news like we saw over the weekend, you should be able to trade it. And I think crypto has basically proven now to be kind of the test ground for 24/7 trading and really has become almost like a 24/7 VIX, or at least Bitcoin has become almost like a 24/7 VIX, where independent of what you think of Bitcoin, it's being used as a risk proxy after hours. Look, everything is interconnected now. Everything is global. The notion that capital formation or investor protection requires forced downtime is certainly outdated. The technology has evolved. All the information is 24/7. It just makes no sense that we're still in this sort of archaic world. And I think that will change very quickly. Futures markets mostly already have this covered. FX and commodities come close. Robinhood and others are trying very hard to create kind of quasi 24/7 market environments. So it's not really a matter of can't, it's a matter of won't. And I'm not sure exactly when that happens, but it's clear that the market needs it, right? Now that you have this 24/7 crypto trading environment, it basically means markets don't sleep anyway. And this convergence between TradFi and crypto is only going to grow bigger. So I think, yes, crypto in some ways has kind of become the de facto weekend risk barometer right now. Anytime there's geopolitical risks, usually what you see is, this is a perfect example, right? I mean, we've been talking about for years how Middle East wars just don't matter for markets because they always blow over very quickly and don't really have much of a major effect. But it was a good example, right? Saturday, Sunday, kind of a crypto bloodbath. You'd expect as soon as Sunday night futures open and Monday equity markets open, that if the damage wasn't as bad as people thought, that crypto would fully retrace. Even some TradFi funds who are clearly shorting crypto over the weekend would probably be forced to cover their shorts come Monday and Tuesday when the equity markets open. And that's probably exactly what happened. Almost everything now in the crypto world has fully retraced that weekend move. And obviously equities barely moved at all because by the time they opened Monday and into Tuesday today, everything was already pretty much over. So I think we're proving, at least for now, that crypto is going to be used by TradFi. The question is, when is TradFi going to actually have the ability to do this themselves? I think that's coming soon. I think the resistance is definitely cultural and not technical. Exchanges, brokers, and regulators often cite concerns about liquidity fragmentation, operational costs, fraud detection, even employee burnout. I just don't think any of those things are real. Like, again, liquidity, there's thin liquidity all the time at different times in different markets. Like, investors know how to navigate thinner liquidity. The entire bond market has thin liquidity, and it doesn't mean you just don't keep it open. Burnout, I don't know. I don't really think just because you have the ability to trade 24/7 that you have to trade 24/7, right? It's no different than, just because you can binge Netflix for 24 hours a day, 7 days a week, doesn't mean you do. Like, humans are trained to kind of turn things off once in a while. So I don't know. I think the catalyst here might not be innovation itself. It might just be necessity, as more and more geopolitical risks rise and more of these kind of after hours events happen. Financial firms are going to basically demand it. So we'll see. I think it's pretty obvious, I guess, that crypto has shown what's possible, and it's time for traditional markets to catch up. I also thought it was really interesting that not only was crypto trading front and center over the weekend, but so was Polymarket, right? Another blockchain-based application. Actually, shout out to the Polymarket team. I think they just raised at $1 billion valuation today, or just announced it today. But if you look at what's happening with Polymarket, it really has become the go-to destination for real-time geopolitical forecasting, as it leverages market incentives from crowdsourced information more efficiently than the traditional media has. So it's pretty interesting to see that basically over the weekend, crypto dominated the headlines, whether you knew it or not. I for one was kind of skeptical that Polymarket would continue to have such an impact post the U.S. elections. I thought it really would be sort of a once every 4 year type platform. But it's proven to be much more than that. If you go on Polymarket and you see how many different markets they have, even if some of them are smaller sizes, it really is being used as a barometer for fund managers like ourselves and others for what's actually happening. So I think the platform's rise speaks to just a broader shift in how markets are consuming and reacting to information and geopolitical data. It's pretty clear traditional news is not only biased, but slow and often incomplete. So, shout out to crypto this weekend. Independent of what your portfolio might be doing, people are wondering what the real usages are. Well, now we know: after hours trading and much better news and information sources. So that's it for this week. Check out the blog if you want some more data and some more graphs on this topic. But good to see the crypto markets being healthy and bouncing back and kind of seeing through another Middle East war that has no real long-lasting implications. Hope you didn't get chopped up. And we'll see you next week. Thanks, everybody.